I liked how we traded away from the other block, right? We closed, traded higher, volume imbalance, trade back down into it. Now we have a volume imbalance and have another block. This is a proportion block. We expect this block to send price higher to our target. So now that we're already close to our target and that happened, now we're looking at this new week opening gap. Okay. This gap, let's see. I want this gap to stay open, obviously. We have buy side there as well. We have buy side here. So we're just here trying to see what kind of day today is going to be. Is it going to be a trending day, or are we still like, because longer term, I'm bearish on the dollar. I'm bearish on the dollar. I haven't seen any reason to be bullish yet. So let's quickly check the dollar. I know it's going to be a bit messy, but here's what I'm looking at. Before I change my bias from dollar being bullish for today or longer term, if we take out this high today, then yeah, my bias is gonna be changed, and I'll be thinking that yes, the tide is turned and we are going to be bullish longer term. This previous day high. So let me just have that there. So unless we do that, I'm bearish on the dollar, and I'll be looking for signatures to go lower for today. So that's my bias for now. But unless we do this, unless we take this out today, then I'm neutral. Like I'm like, okay, maybe the tide has changed and maybe we are going to go higher. If not, I'm looking for lower prices. I'll be waiting for the opportunity, because what have we done? We just took out this guy, then start trading higher. Just start trading higher, right? Nah, that's not my style. Like, so people are gonna be looking to go long, like, oh yes, let's go after the previous daily high, right? Let's do this, let's do that. So I'm not waiting for that. Except today is one of those days, but I'm not looking to do that. I'm looking for, okay, we fooled them going higher now. Let the real move begin. So that's what I'm seeing. That's what I'm internalizing within myself. So now we have the first presented fair value gap. We have these are relative equal lows as well. You see how equal they are here. I just don't want to have too much lines out there. I'm gonna take this out now. I don't think I need it anymore, because if we're gonna go higher, I want to see this level wiped away, swept. So this is possibly gonna be my terminus for the day, and that would be good, because we've worked this lower half. I don't know if we are willing to take out this low already. So this will be my very good terminus. This level's here. Well, let's see. Let's see what price got for us. But if we cross this place, then surely we're gonna take out the previous daily high. So if we cross this new week opening up, you see why I like to have these levels up, and you're gonna see how price reacts to each and every one of these levels. Yeah, I know it's good, it's all nice, and when you like you don't have a messy chart and stuff, but trust me, you must take a if you do not have a messy chart, you must take mental notes of these levels, because you cannot ignore them. They are in price. You can't ignore them. So if, let's say, oh, fine and good, you don't want a messy chart, you must take mental notes. ICT says he don't keep, like, let's say, apart from the fact that maybe he needs us to see it, he doesn't keep the charts. He doesn't keep these lines and all in the chart because it's all confusing. But he has a journal where he jot these levels down. So you must. So either you're jotting the levels down, or you're drawing this, or you're taking mental notes or something like that. But you must acknowledge these levels, because you would see how price is going to react to these. Let's say price works on this upper half, then comes here. It's not just going to ignore this gap like it never existed. It's still going to react to it one way or the other. Or let's say, oh, it's going to be too messy. Let's say you're in the position of saying, oh, it's going to be too messy, I'm just going to draw this and ignore this. What's going to happen is price is going to come here, do something and go lower, and you wouldn't know why price is stalling here. So you need these levels, or If you have a way of making them cleaner, it's okay. There's nothing wrong with making your chart clean. But you must have notes of this level. Look at every level I have drawn out so far. Look at them. When I draw this, um, I think when I draw this BC, you see how price reacted to that. I don't even think I drew it early enough. But you see the levels. Look at this. The ones that are visible to the eyes. Maybe I don't need to draw them. But stuff like the new week opening up that you have to go as far back as the weekly charts. You have to have that. You have to have that. Mostly the ones in closer proximity to the price. No one's saying go to your chart and draw out the whole weekly opening gap there. Just the ones in closer proximity to charts. The ones that I could take a mental note about, I did, which was this level. I knew that if we trade here, we've traded to the 75%, 25% of here. If we traded here, if we closed it, we've traded to 50%, something like that. Those ones are the ones you could take a mental note about, and you could just like, oh, when we're getting close to that, you could go back to the weekly time frame to review it and say, oh, this is what I mean. Do you understand? So that's about having clear charts. Then this one's here is just my opening price, my 9:30 opening price to, I think it goes as far as 12 o'clock, the EM session. So this is the session stuff. I can have it turned off or on. There's the one for the macro. There's the one for the macro. So there's one for everything. So it's not noise, it's reading price. This is a serious business. So now, if let's say I want to go short, what am I going to do? I'm going to go short here. Stop is just going to be above this because I will look for this to be this thing, and I will target for, I don't know, I'll target for this low, I'll target for this low, and we just keep going lower from there. So yeah, so there I'm going to have a short and targets exactly. We have a short in now, traded to this level. You have mean threshold. This is really a breakaway gap. I don't want to see this gap traded to. And where are we going to target for? We're going to target for here and here. So now we're looking at the wick created here as well. Now we've created a wick. So I'm going to be looking at I'm going to be eyeballing it and saying, okay, let's not trade past the main threshold, the consequent encroachment of this wick. Stop is still going to be above here. And we're going to target here. Here's going to be a partial. Here's going to be a target. And you target you could still take a partial. If I take a partial here, take a partial here, take a partial here, and leave something for the rejection block. And that's just gonna be the trade for today. And once we trade below this 8:30 open, stop is you're risk free. So that would have just been a beautiful one, and you call it a week or whatever. But like I said today, I'm not trading today. A rule is a rule. Like, trust me, a rule is a rule. Like, once you say, okay, I'm not trading after the new week, the bank holiday, no matter what, don't trade. No matter what, don't trade. It's just that simple. Right now, my stop is still where it is. I'm not moving my stop. It's still where it is. But the moment we take out, the moment we trade and close below this 8:30 open, then I move my stop. Then I move my stop and make the trade risk free. But a rule is a rule. You're not trading the day after bank holiday. You're not trading the day after bank holiday. It's just what it is. You want to get the best price action. You have Wednesday, Thursday, Friday, and you have to look at the calendar to know the best days you could possibly trade. That's another thing. So I think Wednesday, Thursday, and Friday is good. It's good. So now let's assume that we're going to trade. We're going long here, went short here, stop above here. Your first target, your first partial will come off here. So let's quickly check that. Usually I like my first partial being at least a solid maybe 1.5 or 2 rather, or better still 2. First partial. So yeah, so this is very solid for your first partial 2. This 2 point something. Second partial is gonna be this. Then you're gonna leave this if you have more, if you have more capital, like more what do you call it, contract size or lot size, you could you could still take a partial here and leave for this, but I wouldn't want to go more than this. I wouldn't go no more than this and taking partial in, as far as stuff is concerned. Now we have entered the macro hour, so right now I'll be expecting spooling. I'll be expecting spooling. I expect us to spool away. So why is my stop still here? We could just come here, trade to here, trade to the consequent encroachments of this. It is very permissible. Trade to the consequent. We could do that, or we could just start pulling away from this level and start hitting our targets, bang bang, like that. So it's any one of those two, and that is why you're not moving your stop until you once you take it out. Then okay, fine and good. Let's move my stop once we close below the stop. So you see why I have these levels out now. Once it was this thing, you noted that oh, we are in the macro hour. You expect pulling, and that happens like gangbusters. So right now we've taken our first partial and stop is going to be moved to break even. So now we've banked something and the trade is risk free. So this is just beautiful price. This is just beautiful price. Outlining it before it happened. So I told you what happened when we closed here. I was like, okay, if I'm gonna take a trade today, I'm going short here. My stop loss is gonna be above this first presented fair value gap. Why is my stop loss gonna be above that? Because this is a gap. This is a break. This is gonna be a breakaway gap. This is going to be a breakaway gap. This will have a single pass up, a single pass down. That's a balanced price range. Price doesn't need to come back to that level. We have a first presented fair value gap. We have closed above the first presented fair value gap convincingly. See, we closed here little. We closed here again very well, like convincingly. Now we just only need to poke it and it takes center slower. So that is that. So now we have this new week opening gap and we have this here as well. So looking at that as well. That's going to be like the second partial. So let me just see. Okay, all right. So that's our first partial. Break even, risk-free trade. So we have this other block. We have this other block. So this is a proportion block. So now this is a proportion block. We don't want to see price trade to this. So what am I going to do now? Now I'm going to move it to better than break even, just to be more like more conservative. My stop is going to be here, just above the main threshold of this other block that formed this proportion block. But ideally, because of we have traded below the midnight open and the 8:30 open, and we have a proportion block, I do not want to see price trade past the mean threshold of this proportion block. So normally, where, like, let's say this is where you want to put your stop, because we have this PDRA's backing price, okay? And if you check, I think we probably have a breakout. We have a low, we have a high, a low, and a higher high. So this could be your breaker, because this is the high, this is the low, and this is the higher high. So this is your breaker. Okay, so you want to see, like, you don't want to see a reason for price to even trade back to any of these levels because of how far we've gone. We have this CB, like so many stuffs in our bias. So I did like, and that's why I was like convinced that okay, I think I said it earlier, I am bearish. As long as only time I'm going to change my mind in being bearish is if we trade above the high, this previous daily high, then I'm like, okay, maybe. But if not, I am bearish, and we've gotten that cleanly. So now this is where I said the second partial would be, right? So like I said, a rule is a rule, okay? Because I don't know, maybe someone in the video like, okay, you know this was going to happen and you were so confident it was going to happen. Why didn't you take a trade? Because I don't trade a day after the after a bank holiday. I'm not trading. A day after the bank holiday, I'm not trading. Just like we outlined right from time when price open, we're like, let it run, let it run. I'm not chasing you. You want to go. The only time I'm gonna be ready to say, oh, we've switched bias, if we take out this previous daily high. Okay, I think we're gonna be bullish longer term, but short term, we're bearish, bro. We're bearish, and we did that. They chased it higher, we sent it lower. Smart money. That's how it's done. So I'm just gonna see if we can get to consequent encroachment or rejection block, and I'll just cut this and we're done. Like I'm like, okay, told y'all. Now just go work, study more, get better. Okay, so yeah. So now I'm gonna be looking at this CB, right? I'm gonna be looking at the CB. It's permissible for us to trade to. We've left this open. We've left this open. Where's our stop loss going to be currently in this trade? Our stop loss is going to be here above this proportion block. This is a proportion block. Okay, this two up close candle is a proportion block because it traded into this other block. An other block inside another block is a proportion block. We left it, didn't even have the willingness to return to it. That is bearish. Yeah, so looking at that, looking at the CB. Oh, my bad, my bad. Hold up. Second partial. Now, is another block traded into this other block. If we leave this, this is going to act as a proportion block. I want to see it send us lower to the mean consequent encroachment of the new week open. And if you have enough contracts with your lot size, this is a partial. This is a partial. Then, like I said, you could leave a runner for this or this. So if I was in this trade and I have like it's been so fast, like from here to here, this is just 12 minutes. So in a trade like this where okay, I wanted to take my partial here, I could take off something here and just leave the runner for this because of the way I'm seeing order flow. I'm seeing that oh, we have left this level, we've not traded to this, we've failed to trade to this level, we failed to trade to this level. And if we just keep coming lower like that, like man, we are super bullish, we are super bearish. So I'm like, okay, I'm just gonna leave for the low of this new week opening up, and that's all. I'm not gonna try to chase it to this because I definitely, if I was in this trade, I think I would have made enough for the week already because price has moved real good. Like it's not been choppy, it's been straight to business, one-sided straight to business, and voila. So it's beautiful. It's beautiful. And it's algorithmic, so you can't FOMO. You don't have to fear, oh, I missed this. How's you can FOMO. This is algorithmic. It is repetitive. It repeats over and over and over again. You just have to study, sit surprise, watch, learn. Like this is like an A plus, almost an A plus setup. This is my determinant for an A plus setup. I want to see the both of them going in different directions. So I want to see the dollar going up, and I want to see the Nasdaq coming down. So look at the macro hour in the dollar. What has it been doing? It's been trading higher. So you'd be expecting lower prices in Nasdaq. So okay, it's an A plus setup. But why I like it is because first of all, when I saw this, I'm like, this has to be bullish. This is bullish. This has to be bearish. This is bearish. Then we have so many PDRs supporting the price going lower. We had so many PDRs. We had this order block. We had this proportion block. We had midnight open. So I knew that I don't want to see us straight back up to it. Then we had this breaker, high, low, higher, high, trade lower. This candle here is a breaker. We have midnight open close to it. So strong PDRA supporting price. But the next partial is going to come off at the consequent encroachments of the new week opening gap. That's where the next partial is going to come off. Then we're going to leave one up for, we're going to leave a runner for this. We're going to leave a runner for this. But that's going to depend. Now, in the case of do I leave for this or this, it's going to depend on if we take out this high. I don't want to see, I just want to see speed. So if we do take out this high and I don't get that speed, then I'm just going to peel one off here and leave a runner here. So it depends. This is why you pay yourself, okay? So imagine you, oh no, I'm gonna do a full pull. You're gonna be panicking right now. You're gonna be taking a lot of mental because price could easily we've shared to the new week opening up. That's a discount array. Price could use that as a discount and say, okay, let's go back up. This is buy side. So you wanna have peace. You wanna know that, oh, you're managing your stop, you're managing your trades and your stop properly. You're not being pushing your stop too aggressive, or just in case. You're keeping your stop to be as comfortable as they should be. Okay. You're not panicking or nothing. You've taken a partial here. This is relatively equal low. You've taken a partial there. You've taken a partial here. Why wouldn't you pay yourself here or here? Remember, like I said, when we were earlier, I said this is definitely a partial taking place. Remember, if you were in a trade like you went long from here and you really haven't paid yourself, even within this consolidation, you should be taking something off. But let's say you are stubborn as a goat and you don't take nothing off, you should take something off here. You should be paying yourself off here. Okay? You should be paying yourself off this level. Like, surely you should be doing that. If you haven't taken nothing, okay, and you are leaving, but you have intentions to take something off here, no, don't take something once we take out here. Like, you should have a partial ready for here. Then you can still do whatever you want to do here and here. But that's for the ones who didn't take something off here. When price starts doing this, creating liquidity, please bank something once we've taken out that liquidity. That's running down on equity, so you gotta do that. Like, if I was in the traders myself, and even though I've taken stuff there and I'm not more confident, like, oh man, this is weakness, like, I don't know, I would want to take, like, just even if it's just one contract, it doesn't have to be much. If you've paid yourself so much here already, just one contract is not bad. Then you still take off something here, then you just, you know. So that is my own, like I said, depends on your own experience. What I notice the market likes to do is, once we do this, the highs and the lows made in the macro, the market would like to run on that. So that is why I still like where my stop is, and I'm still looking at this CB. So stop is going to be somewhere above the main threshold of this proportion block, and we trade to this. I want to see, like I said, I don't mind seeing this taking out, because price would like to sometimes run against the liquidity created during the macros, the 20 minutes window for the macros, right? So take out this high first. What do you think is going to happen? We're going to take out this high, then start to run back lower. And what has price created here? Relatively equal low. So yes, I am still bearish. Yes, I am still bearish. So that's why I'm still very comfortable where we have our stop. Okay, still comfortable above main threshold. Now looking at the CB, I don't want to see us straight past this CB. And where can it go max? The mid threshold of this, because of we have this 8:30 open and midnight open. Where's your stop? Above main threshold. So now let's draw out the main threshold of that other block, and once we get that, we are done, and you would see why it's good to pay yourself. Because now compare someone that took a trade here, went low here. Let's say if you even did go low here without paying yourself, you will have aggressively moved your stop by now, right? And that will have made you not make enough compared to you taking yourself here. You just be comfortable and sitting to the idea of where price should trade to, sitting to the idea like, okay, this is where your stop is gonna be. And if it takes you out, fine, but if you paid yourself, you've gotten something off here, you've gotten something off here. So I just don't want this chart to be too messy. I'm just looking at here. Once we trade here, then we know that, okay, the trade is gone, and we've made something, like we've banked something. Okay, so this is the main threshold of the proportion block. Anything past it, then we're done. Like, done. Let's check the dollar. Should we check the dollar? Let's check the dollar. See, dollar is still going high. Dollar is still going high. So I'm still very bearish. Traded to the proportion block. Right. So let's see now. What I'm looking at, what I'm reading now is, let's forget that I said dollar is going high, right? What I'm reading now is this BC. It's this BC, right? I like that we have closed below the 8:30 open. I like that so much. So now, can it send price lower using this as an inversion fair value gap? And then once we trade out close below it, obviously we use this as an inversion as well. Take out this low and come here. then I would just take my full. I'll just take my full stop here, or possibly I would even take my full stop here, and I'm done for the day. I'm satisfied because of this whole thing we've been in. So now, what did I say earlier? If you didn't take a partial, there is no way you're gonna be comfortable putting your stop here. You would want to milk something more, right? So now you would be here and you would have been stopped out because you will have moved your stop maybe here or whatever. Like after you see this consolidation, you could even move your stop here. Or let's say, okay, yeah, you're just gonna give it a grace of the midnight open and stuff, but see what has price done. Price has gone back lower, taking out we know that okay, you have taken something, so there is no need to panic. You've paid yourself. Even if price comes for your stop, there is no problem about that. You've paid yourself. You're not scared of taking a loss. Like you're not scared of. It's not even a loss. You're not scared of price hitting your stop. Okay, where did I say the stop is gonna be? Just above the mean consequent encroachment of the. Sorry, just above the main threshold of the order block, which is gonna be this level, 25%, right, or 75%, how you call it, but the upper quadrant. Excuse me. So you're not going to be scared of that. And what happens? We didn't even trade to, we couldn't even trade to the consequent encroachment, the main threshold of this other block, and now price is going lower. This is why were you confident in doing this? Because you were waiting to pay yourself. So this is just how it is. Okay. I said all along, I said, yes, I know we are bearish. Yes, I know I want to see lower prices. Okay. But I have still noticed that once we do stuff like this in the macro, okay, we've created a lower low and created a higher high. Or rather, we've created a high and we've created a low in this macro window, in this period. Price sometimes would want to come after the macro hour, you want to come take that level away, then now come for this and start making the real move. So that is something I'm looking at. Now, looking at this, I like this. If we were bullish, do we want to see, if we are bullish, I want to ask you a question in reading order flow. If we are bullish and we have this should be a mitigation block, right? And now this should be a mitigation, this is a low, a high, and a lower high, and a higher low, sorry. A low, a high, and a higher low, right? Not a lower low, a higher low. So if we are bullish, this should be a mitigation block because this doesn't take this out, so it's not a breaker, it's a mitigation block. So we have a mitigation block. We have a BC, a buy side imbalance, sell side inefficiency. We have two BCs. Which BC do you want to see traded to, and which BC do you want to see left on field? You want to see this BC traded to and this left on field. You don't want to see this field, right? But now, if at all you're going to see it field, where do you want to see the the upper half? You don't want to see the lower half. But now we have violated this mitigation block, violated these two BCs. You should know that we are going lower. Like, if this is very, very clear, like, you shouldn't see this on field. You shouldn't see this field, I mean. So that is why you know, okay, it's a telltale sign that, okay, we should be going lower. Where should you be paying yourself, like I said earlier? Here. Pay yourself here. If you still want to leave for here, leave. But pay yourself here. Take a partial here. I said it earlier. Leave your stop here. So it's just like that. It's not rocket science to be disciplined and follow a rule. Just like me having a rule of not trading. I'm not trading those days. Even if price runs a million handles in the direction I anticipated that it should, and everything was perfect. The star was pink. Just messing around, but like everything was perfect, and stuff. Not trading on these days. I'm not trading on this day. It's that simple. A day after the bank holiday, we're not trading. A day on the bank holiday, we're not trading. NFP Thursday, we're not trading. So many CPI told a day before CPI, we're not trading. Like, the rules are the rules, okay? So you just have to have your rules, and this is with you practicing, listening to your mentors, because they've been there, they've done that. Listen to them, don't take their word for it. You go to the charts and you see that, oh, he ain't bluffing, he ain't blabbing. So now we have this. This is a reclaimed BC. It's a reclaimed BC, and we still do have, sorry, a reclaimed CB, and we still do have a CB here as well. Okay, so we traded high, came lower, closed lower. What did I tell you? I said that I even like that we closed lower. Now that closed, we return to the 8:30 a.m. And what have we been doing? We've been selling. So Yeah. So I don't know, why do I move my stop here? I do not want to see us return back to this level and start going over. Once we take out this level, then I'm gonna move my stop, obviously. Once we take out this lows, I'm moving my stop. Where am I moving my stop? Till we take out the lows. So we have this inversion fair value gap to look at. But till we take out this low, then I'll move my stop. So for now, my stop stays where it is. So you're about getting that sell side. You're about getting it. Let's say you were part of us who took a partial here, You're taking a partial here. Trust me, you have to take a partial here. So one contract will come off here, another one will come off here, and you leave your target for here. Even though we think that price might want to reach for here, we don't care anymore. You take a partial here, and you leave a runner here. So now that depends on how many contracts you have left. So let's talk about that. So definitely your runner is going to be like one more contract. It's not going to be like the biggest. So let's say you still have 5 contracts left after taking all those partials and stuff. You still have 5 contracts left, right? You're going to take out 3 here. You're going to take out 1 here, and you're going to take out 1 here. You want to take out the bulk of your position. If you're doing your full pull here, you want to take out the bulk of your position here. So you have 5 contracts left, taking here, taking here, taking here. You have 3 contracts left. Okay, no problem. You take 1 here, you take 1 here. You can still take 1 here if you want. You have 2 contracts left. You take 1 here and your full pull here. Forget about this guy. You have 1 contract left. Please pay yourself off here. You've tried. You've been in this move. You've taken. Like I said, if you are part of those who took. Now, let's say you came in this trade with 1 contract. You're taking off here. You're done. After you take out here, you're done. Don't pursue this. Don't pursue this. You're in the macro hour. Take advantage of the macro. It's giving you this. This is a good 185 bucks. That is good. You don't need this. You don't need this. If you get this, it's fine, but you run the risk of being stopped out prematurely and just living with only this. So if you want to take that risk, I respect you, but you know, so it depends. It depends. So now we're about to take that. About to get that here. Good, beautiful, beautiful. I like that. Just like we outlined. Like I said earlier, like I was so confident with this. Like I knew we were gonna get this, but it doesn't stop this from happening. What did I tell you? During the macro hour, I already observed that they like to run this out and come back and run this place out. It's something they do. It's something they do during the macro hour. They know the macro is gonna come, so now they generate liquidity for both sides. So they come take out the buy side, then take out the sell side. Then they make their real move. Their real move could just be the continuation. It could still sometimes be that, oh, they've taken both sides out, then they do this. But the fact that they run this place so high, downside is most likely the real move. But that's why I said take a partial here. And if you want to take something here, you can leave for here. Beautiful morning session. Let's take this out now. I hope something was learned here, because this was beautiful, just like we outlined. This was all right. I'm here now. Okay, so just like we outlined, take something off here. This might not be guaranteed. Even like, let's say you didn't take something off here and you fall short of reaching here, would you be happy? You cannot afford mental stress in this game. You can, mostly when you know you're supposed to do something and you don't do it because you're waiting for something bigger. It's better you follow your rules than you know that you missed something out of you being greedy. It haunts you more. So that's it. Like, even if we later come to touch here, like, do you want that mental stress? I told you, if you have 1 more contract, pay yourself here and be done. Left. If you have 2 contracts, okay, take something off here. If you have 3 contracts, then that's when you are permitted to do 1, 2, 3. If you have 5 contracts, what did I tell you? Take the bulk here. Take 3 off here. Take 1 here. Take 1 here. That's good. What do we have here? We have another block here. We have a CB here. my stop is gonna be above here. Because right now I'm ready to be out of this trade anyways. Right now I'm ready to be out of this trade. So if it does come take me out, fine and good. I'm looking at this other block. Looking at this, I'm like, if we come back and trade past here, man, I'm done. I'm done. I've been here to way too long. Okay. Yeah. So I want to see if we're going to get that. I should be cutting this stream in a minute. So I just want to see if we're going to get that. If we trade past here, I probably would just cut the stream or the recording, whatever you want to call it. But we'll just cut it and be done. Like, we've tried. We've been on here way too long, and I don't want this video to be long-winded. We've gotten what we said we want to get. Guys, I think I'm finna cut this right now. We've been here for way too long. So yeah. Remember I told you that's why you have to pay yourself here. Because we've seen this way too. Like that's why experience is gonna do you like so much good. Just seeing we've seen this way too much. Like we've seen it. So you pay yourself here. Definitely you're paying yourself here. You can leave something here, you can, but you must pay the bulk of your possession. I can overemphasize on when I said that the bulk of your possession or your position is coming off here. The bulk of it here. Then you can leave like a run of one. You can leave one, but the bulk comes off here because we might not get this. And now price failing to trade to the consequent encroachment and start making runs could look bullish and for the session, and you don't want to be in that. So why not pay yourself here? And if we get that, fine. If we don't get it, fine. But logically, with logic, you pay yourself here. So guys, I think that is it for the session. I'm done. I said once we trade past here, I'm cutting the stream. But logically, what I wanted to let you know that if I was in this trade, I'll just be looking here. Or I might just cut. It depends. It depends on the feel. Like, okay, the money, the stuff, we've already met the real objective. So if we close above this, I'm just gonna cut it. Like we've already closed above this. We've already closed above it, but just by a little. Well, that's enough to like, okay, let's cut the trade, let's cut the idea and all. So just not to make this video too long-winded, which I already know it is compared to when we took the trade, yeah, maybe not too long, but we didn't start. That's not when we started, right? It's 1 hour already, minus the 30 minutes before time or stuff like that. So I think we're good. Peace, guys. And that's all she wrote, guys. So this is why you have to pay yourself. Thanks for watching. Peace.